What's up, YouTube? My name is Amal, and I am ready to do a YouTube live session as promised right before the daily, weekly, and monthly closing. So let me just grab this link here real quick and post it to the other channels I'm a part of, and then we'll get started shortly. All right, guys? Okay. Let's see what we got here. Grab the link. Okay. Uh-oh. It's making my computer really laggy, but we'll get through it. Go. I'm posting all these channels I'm a part of. I think people want to know exactly what in the heck is going on with the market. Let me post on these different channels. Give me a thumbs up if you're joining and you see my live video. Let me just post it to all these channels, guys, real quick. Hang tight. Some of these channels I haven't been to in so long. Let's see. It's that one. Oh, that's my channel right there. All right, let me just post all these in different channels, and I'll get started shortly, guys. Be patient, and thank you for joining. Happy 2019 to my friends on the other side of the world. I'm still here in the East Coast of America, so we haven't hit the New Year's yet, but congrats if you're already in 2019. You're one day closer to a bull run than we are. So all right, guys, thank you for joining. For those of you who don't know me, my name is Amal, and I am the head analyst of the CryptoSamyak community, and I'm also the founder and chief investment officer of Pegasus Digital Asset Investment, pegasusdai.com. That's our website. We are SEC certified. All right. Thanks for joining, everyone. I got 23 people watching. This is all right. 27 people. Well, glad you guys don't have anything else to do except you know, look at crypto and see exactly what's going like myself. So we'll get to the analysis in a second. So let me just get more and more people in here. All right, y'all. For those of you who are joining and are loyal watchers for a while, thank you. I appreciate your loyalty. Thanks for being part of the CryptoSamyak community. And I appreciate it, guys. Sean Nevin says, I'm a cryptoholic. Yeah, aren't we all, man? Aren't we all? Ryan Jack, welcome. Nick, welcome. Nathan, welcome. Let's go, Vin. Welcome. Thanks, everyone, for joining. All right, guys, let's get right to it. Okay, so I have the 1 hour chart pulled up here on Coinbase. And as I mentioned before, guys, my philosophy in technicals is that, you know, raw priced action is always the king. Okay, you need to be able to look at exactly what's happening in these candlesticks. Okay, each of these candlesticks is a representation of stories of buyers and sellers coming to an agreement in a price or not coming to an agreement in a price, like this big red candle. Okay, every single one of these candles is a representation of the hundreds and thousands and maybe even millions of buyers and sellers in this particular asset, which is BTC US dollar. Okay, and the highs and the lows and the the ebbs and the flows of the price are reflected by these candlesticks. Okay, so a large wick at the top like that is more bearish because price tried to get up that high, but it couldn't close. So the bears pushed the prices down and they closed it way down here. When price is overly bearish, you'll see a big red candle kind of like this. Okay, so sell pressure from the top with the tall wick and a huge bodied candle kind of like that. And the bullish hold on this was very little, and little to none, if you will, right? Because the price went all the way down to 37.06, but it barely closed at 37.29. Okay, but it was at a high at 3,900, right? So the bears pushed the price almost $200 to $250. Okay, and that clearly signifies that the bears were overpowering the bulls in this particular area, right? Okay, so what exactly are we seeing in the 1 hour chart? Okay, so what we see in the 1 hour chart, guys, is subsequent lower highs kind of create like this, right? So here's a lower high right here, here's another one, here's a bit of a double top, and then price comes down here, lower high, and then boom, we're just dumping. Okay, now if we look at the Ichimoku cloud, and I've said before, if you want to use the cloud in crypto, you want to double the settings because the market is faster, it's more volatile, and it's actually open 24/7, 365, no holidays. So you want to double your settings if you want to use Ichimoku cloud. Okay, so let's turn on the cloud for a second and see how that looks. Right, on the 1 hour chart, we can clearly see that we are under the cloud. Now this is a overly bearish sign. Okay, when the price is under the cloud, price is bearish. Okay, so there's two ways to look at this. When the price is under a red cloud, it's very bearish. When the price is under a green cloud, it's still pretty bearish. Okay, now you can also look at these red lines right here. See that red line right there and this blue line right here, right? These are the Kijun and the Tenkan line, or the conversion and the baseline if you look at the settings. Okay, now what these settings show you is that when you see a cross of the Kijun, which is the red, over the Tenkan, which is the blue, this is a bear cross. This is basically a sell signal if you're purely trading off the Ichimoku technicals. Okay, now the Ichimoku technicals would have given you a sell signal multiple times. Okay, technically it could have given you a sell signal way back here, which is on the 28th of December, and it could have also given you a sell signal, let's see, way back here. Okay, so here's that first sell signal. Okay, or actually there's one farther back too. Okay, so here's your first sell signal right here on the 1 hour chart, 22nd of December. Here's your second sell signal right here. Again, if you're purely trading off Ichimoku cloud settings, okay, here's your second sell signal. Okay, these basically depict a bearish cross when the red line, which is the Kijun, is over the blue line, which is Tenkan. But remember, guys, that the higher time frames always trump the lower time frames. Okay, so let's see what's going on the 4 hour chart. All right, so on the 4 hour chart, we see that price, it was rather slowly touching the cloud but coming back and rebounding from it, right here. This was about 2 days ago. But it couldn't even get past the cloud, right? Every single one of these candles closed under the cloud. The cloud is nothing but a gathering of price action and data from previous periods. Okay, that's exactly what the cloud is. It's a big form of support or resistance, just like when we draw supply and demand zones. Okay, and you can clearly see that once price enters the cloud, it is not able to pass it. And once it's not able to pass it, you can see that price just comes hammering down, okay, towards the bottom of the cloud right here, which is right about 3684, right, which is the bottom of the cloud. Now, one interesting thing about the Ichimoku cloud is, and by the way, you know, I've read 2 books on Ichimoku Cloud, so I know it fairly well, but I'm not saying I'm an expert or anything. But when you see flat lines like this, right, at the bottom of the cloud or the top of the cloud, more often than not, these are seen as resistance on the way up and supports on the way down, okay? So price actually gravitates to it like a magnet, all right? So you could clearly see that every time price came down to this level right here, you could look at that. The price closed maybe a couple of dollars right above, you know, the magnet side of the cloud, even the next candle, right? So for 8 hours straight, the price could not close below the bottom of this cloud. But now it's looking like it wants to go down farther and farther, right? So now what's in our way? Well, we have the low, which was created right here, right around, you know, 35.70, right? 35.70 is the low that was created once we got rejected from about $4,200 and came down all the way here. That's a pretty steep, you know, $700 drop. But then we came back, you know, tried to show some bullish strength, but in the grand scheme, all we really did was, you know, go like this. Let me draw that a little bit better. All we really did was we moved the price all the way up here, came down hard, and then created a lower high based on the 4-hour time frame, right? This is definitely not something that you want to see happening to price, especially when, you know, we took a couple of attempts over here to reach past 4,000, okay? So clearly there's a lot of, you know, sell pressure and a lot of bearish pressure at 4,000, and I don't know if we can get past it anytime soon. I just don't know if the bulls have enough strength. But one somewhat positive thing is that we are staying out of this channel right here, which was started way back here in the middle of November. So you can see points being touched right here once, twice, 3 times. It held here somewhat. So this is like a half, so 3.5 times, and, you know, even 4 and 5 times, right? So price is touching and rejecting of falling back into this channel, which was basically a descending channel, right? Kind of like the price was just falling down like this, right? But price is rejecting it for now, okay? If we break down into the channel, you can no doubt see that the price will probably break 35.70, okay? Because the way I see it is from a drop of 4,200 to 3,500, all we could muster up was, you know, barely 39.50. So I would have probably no doubt that the price would more than likely take out this, you know, 35.70 low, okay? Let me check out another chart where I list supply and demand zones. And remember, guys, supply and demand is, you know, just a fancy word for support and resistance. That's really what it is, okay? However, it's a little bit more important in a sense to understand it conceptually, because you have to understand why exactly does price come down to this level, so this would be demand, and why does it bounce back so hard? Well, clearly there's a decent amount of buyers waiting in this area, and this is why you see these large wicks from the downside, okay? They see the price coming down all the way here, but they refuse to let it, you know, close down here. So this is clearly a critical level where the bulls were basically, you know, holding down their fort, right? And when they're holding down their fort, they refuse to let the prices dip lower, and then they push it up really hard. And you see a rally from all the way down from, you know, about $3,500 approximately, all the way to $4,400. But as you can see, price slowly started to trickle down and then trickle down, and then it just, you know, broke this this demand block right here. And once it broke the demand block, it found new demand even further down, which is, you know, right around $3,200. And then you could see that this demand, which was support, became supply or resistance, okay? And it works perfectly, guys. If you just draw these out, you know, on your own charts, if you want to practice, come join our channel. I'll show you guys how to. You can see that, you know, it was support back here, right? You could see it being support. Then price came down and became resistance, and then price fell down even further, became resistance again. Then price flagged sideways, meaning it bull flagged, and then it just finally ripped right through. okay? But clearly it respected this level, right? And then what happened? Well, once price broke through all the way up to 4,000, it came back down to that same level, right? If I drew a horizontal line, as you can see this, this marker right here, right? About $3,600. Price came back to the same level right here, right here, right here, and these, wicks right here. And you can see this became demand again. But now it's coming back to that same level, and now we have to see if price is going to hold. More than likely not, okay? Usually you don't want demand to be tested or support to be tested so many times. Vice versa with resistance, by the way, If resistance is tested multiple times, it's eventually going to get broken. So same thing with, support, right? This resistance, or rather this support, was tested once, and you can see that because it was tested this one time, it didn't even reach back past, this level right here of 4,200. That may have changed my mind a little bit if I saw price break, this swing high right here of 4,200, and then it came down again, because then that would validate that the structure has changed, meaning that there was a low created in the demand, and then price went all the way up, but someone or entities, whatever you want to call it, want to bring the price back down here to accumulate, and then they'll push it up even higher. Okay, so you always want your support to be tested as resistance and your resistance to be tested as support. So you want those horizontals respected. Okay, all right. So sorry if I'm talking too fast, guys. I really appreciate you guys joining. You guys are some of the most loyal and avid followers, and I really get motivated to teach and to explain to you guys what's happening in this market, because I don't know if you guys know, if you joined my previous videos from last year or the year before that, but I've been trading for close to 11 and a half years now, and I was actually in the equity markets for the most part, a little bit in commodities, very little forex, and only recently did I start to touch crypto. But probably about a year and a half, 2 years ago in 2016 when I touched crypto, it really was a market that needed direction, right? It was a market that did not know exactly how to use technicals, how to understand fundamentals, and I decided to embark on my own journey to try to teach what I know best is, technical and fundamental assessments of assets, okay? Now, I can't definitively say I'm a crypto expert, but I am somewhat of a, an experienced player in the equity markets, okay? And what I can tell you is that, there's a lot of people misleading, novice investors, or even, somewhat experienced investors like yourself, watching these videos, and they lead you down the wrong path, and they lead you to read technicals incorrectly. They lead you to they lead you to read market analysis incorrectly, and some of them actually make shill videos to push you to buy one thing or another. Now, the sad thing about shill video is that these people don't even know that retailers don't move the markets anyway, right? The real people who move the markets are people with bigger pockets and bigger money. Now, who knows? They might have been the big fish, and they were actually hoping that you would buy a little bit here, a little bit there, and you would help push the price up, and they would basically be selling into what you're buying. That's exactly how smart money plays in traditional markets too. So in a lot of ways, a lot of people got duped into buying shitty projects because they were sold these projects as like the next Bitcoin or the next Ethereum, the next 10x or the next 100x. And my job is to at least show you guys that, hey, let's look at the market in a purely objective manner, right? I have nothing to sell you. I don't even care to tell you about the projects that I own. I don't want to tell you what to buy, what to sell. My job is to simply teach you how to read markets better, and so you can call the bullshitters out to their face when they try to sell you, some garbage shit, right? So, so here we go, back to the market, okay? Let me look at the comments real quick. Mr. Retta, back delayed again. Yeah, so I was going to talk about backed a little bit. Mr. Retta, Barry Haberts, happy birthday, Sam. Yeah, it's Sam's birthday, guys. Backed is coming in February. This government shutdown is hurting it. Yeah, I don't really know how much of a big player backed is. Sean Nevins, Trade Devil is the one I have a hard time following. You explain it really well. I don't really know about Trade Devil. And by the way, to be honest, guys, I do not listen to anyone in this space at all. There's maybe like 1 or 2 people that I follow here and there, but I'm not, you know, a religious follower of their content. If I'm on YouTube and I happen to come across their video, I'll do it. The people that I truly learn from are the ones who are not posting on Twitter and probably not on YouTube. You know, my uncle is actually a founder of a hedge fund himself, so I've learned a lot from him over the years, and I feel like I have enough knowledge to impart, not only from him, but all the books that I've read and the experience that I have for the last 11 years. And that's what I'm here to do, guys. All right, so back to charting. One thing I mentioned earlier was that, let's pull up this chart right here, actually. Here's the Bitfinex chart. I mentioned a little while back that I was seeing this inverse head and shoulder pattern being created. And if you guys don't know, go to this website right here, guys. It's called Bulkowski. He's actually a veteran trader, you know, one of the best in his craft. And, you know, I actually look to his website sometimes for failure rates, you know, like the throwback rates, etc. Right? You can learn everything that I've learned and even more from this guy. Just read his website, take his quizzes, psychology, etc., and you'll learn a lot. Okay. And I will be posting more links, and I'll show you guys exactly my thought process when I look at charts, when I look at fundamentals, technicals, etc. later on in the video. Okay, so for now, so here's the inverse head and shoulders pattern. It has a target to the upside like that. So that's exactly what I've drawn here, right? As you can see, my experience in the equity markets with inverse head and shoulders is that you typically don't want the right shoulder to go below the left shoulder. The right shoulder has a worse breakout rate if it's below the left shoulder. Now this one is clearly not as low as the left shoulder, so this is definitely a good thing, but that right shoulder is still being created right now, and I'm still waiting patiently. Okay, now if you're waiting to play BTC or alts or Ethereum, etc., based on the break of this pattern, what you want to do is wait for the breach of the neckline. Okay, so you want to see at least a candle close above this neckline, right? So the neckline currently stands right about $4,200, maybe even $4,300 just to be safe. So when a candle closes above this and you see a subsequent candle open above, this neckline, that's when you know that the inverse head and shoulders pattern, which is a bullish pattern, is going to break to the upside. So then how do you make the target? Well, what you do is you take the size of the head, which is this right here, to the neckline, which is that right there, and you just pick it up and you drag it from the neckline right there and you move it right to the upside of the neckline. So our target would be for here, right about $5,400 or $5,300. My target was actually $5,000 just to be safe, because that's what the Coinbase prices were reflecting. So I would probably lean towards 5,000, also because it's a psychological barrier, and I don't really want to chase the extra $300-400 unless I really see something stellar in the chart. I rarely go for the extra percentage points up top or at the bottom, right? Because remember, guys, if you want to be the best traders, okay, or the best investors, you need to do what the smart traders and the smart money does, which is that they do not chase bottoms and they don't chase tops. They trade the middle. Okay, the middle is where a majority of the money is made. Okay, the bottom is where small fish novice investors get wrecked, and the top is for the people who have undying hopium and loyalty to an asset where they can't see it fall, and then they get wrecked 70, 80, 90% down, like a lot of other crypto people in the space right now. Okay, so if you want to be a smart investor, you wait for confirmations like a break of this neckline, and you take the targets as stated, as per Bulkowski or Investopedia, whatever books that you want to read, and you take the trade. Okay, there's no reason for you to be invested, or if you're thinking about trading it right now, there's no reason that the asset has given you as per technicals. Okay, if you just believe that Bitcoin is undervalued at 3,800, sure, I mean, go ahead and buy, if that's how you feel. But if you're trading, short-term trading or day trading especially, this is not an area you want to buy. What this really is a it's a no trade zone or a neutral territory, right? These are untradeable zones that you do not want to get into unless you want to get wrecked or you want to get stopped out by 5, 10, 15% losses. And remember, Bitcoin drops fast. The volatility is so high in this space that before you can blink, the price has dropped at least 3 to 5%. Okay, so you do not want to be a gambler in this space. You want to be a smart trader who trades off confirmation. So here's that inverse head and shoulders pattern, almost still playing out. The right shoulder is still being formed. It has not been invalidated, but it also has not been validated. Okay, so let's wait on that. Let me check out the longer term charts. Let's see how the weekly and the monthly is looking and how 2019 is going to look. Okay. Before that, let me say hello to the other people who have joined. Please give me a thumbs up, guys, if you're watching and you're actually enjoying my content. There's no bullshit on this channel. I'm not pitching or shilling you anything. All I really want to do is make sure that you guys make wise decisions with your money and you learn, and going forward that you pay it forward to other people. All right, that's what life is all about, right? There's no point in making money by yourself and getting rich. You want your friends, your family to get rich also, right? So hopefully Bitcoin and crypto gets us all rich, right? Welcome Prussian Millionaire, welcome Dolphin134, welcome Sean Nevins. Thanks guys for watching. Smash those thumbs up. I'm gonna keep going along with the YouTube live. So here's the BLX liquid index chart. And I like to look at this chart on the weekly because it contains pretty much all the data gathered from multiple exchanges into one nice tidy chart, okay? So since 2015, right, there's this 200 weekly moving average that we've held for many months, okay? You could see that we breached it once in January 2015, and we touched it multiple times through the year, and then walked away from it almost in October 2015. So in October 2015, which is about 10 months total, we moved away from the 200 weekly moving average and then took off to our 20,000 bull run. But now exactly what's happening. Let's see. So we touched it once, right, which is this 200 weekly moving average, as you can see. And we bounced off it, strongly, right? And we moved to the upside to $4,200. But then the next weekly candle, which actually should be closing in the next, well, actually it should have already closed, but BLX actually only reports on candles that have closed. So this candle will be forming tomorrow, okay? Or rather will be completed tomorrow and a new candle will open. So for the most part, this candle has closed just like this. And what this candle really says, guys, is indecision, okay? When you see a big wick at the top and a big wick at the bottom, and whether the candle is green or red, with a small body right in the middle, this is a indecision candle, okay? Indecision is nothing to get happy about. If anything, this is probably not a good sign because I would have expected a far more bullish move to the upside after hitting that 200 moving average. But what happened really was this trend line that we've respected for, many, many years, since, 2011 or 12, we've now broken down under it, okay? Now, I'm not saying that this is a bearish sign and, everything's going to end for Bitcoin, but is definitely not a good sign, especially a trend line that we've held for so long. Trend lines can always be recreated, right? And I'm not too concerned about that. But the fact that we bounce off a 200 moving average, the weekly moving average, and we're below this ascending trend line tells me that we may actually have more downside ahead. So where exactly does, more downside ahead lie? Well, as I've said before, you have to look at exactly where the buyers and the sellers were stacked up before big moves like this, right? And the way you determine that is by reading order blocks, okay? Order blocks, if you haven't understood, please come join our channel. I explain it thoroughly, but basically an order block is a number of candles or a number of days or weeks where buyers and sellers agreed to either buy a price at a certain point and then decide to push it up, to a higher point or even a lower point, because order blocks could also, imply bearishness. But in this case, the next order block is between $2,900 and all the way down to $1,900. And currently we're actually making our way through this order block, which is anywhere between $4,700 and $3,000, okay? As you can see, we barely touched close to $3,000. We're about $100 or $150 short, but this order block has already been breached. Okay, the reason so is because we've already spent 1 candle, 2 candles, 3 candles under the 50% Fibonacci of this order block right here. And now we're really struggling to stay above that 50 Fibonacci. A perfect example of that is this right here, okay? Here's the order block from way back in, let's see, this was 2017 November, right? In November 2017, you could see that this large down candle before the big up move, right? Again, also known as an order block. In this case, it would be a bullish order block because the price went down first, caught a lot of buyers, and then pushed up hard, right? So in this case, this bullish order block was being tested multiple times. Way back here in February, on the weekly candle, we tested it but closed well above it on February 5th, 2018. And then we went only to 11,700 and then came back down again. Spent about 1 to 2 weeks under the order block but above the 50% Fibonacci, and then went up to 10,000 and then came back down. Now look, okay, now we spent multiple weeks under the 50% Fibonacci level. Okay, then we went to 8,500 and then came down again. And after that, we pretty much spent most of our time under the 50%, excuse me, Fibonacci level. And if you look back on my trading view videos, I had mentioned that because this was happening and the overwhelming bearishness of the crypto space and the sentiment had turned downward, I had stated that 5,500 would be my next target for this current OB. And as you can see, it touched exactly that target. And then the next candle opened below the $5,500 order block and then broke all the way down to $3,200. Okay, so what that says, guys, is clearly technicals work even in crypto, right? So what we need to look for is, does price stay above this 50% Fibonacci? And if so, how long? And will it retest $4,700? If it doesn't, the price will eventually and ultimately fall down back under the 50% OB, which it pretty much already has, and then it will come down to 3,000. Okay, so then if it breaks 3,000, then we have to go with the next order block, right? One thing I don't like about the crypto space is that people are impatient. They just want to know where exactly is price going in 2019 or 20. Now listen, guys, technicals is about probabilities, okay? No one in the space, not me, not anyone, has a crystal ball. And any person that says that price will go here or there tomorrow or the day after is fucking lying to you, okay? And call them out on their bullshit, because if they had such a crystal ball, they'd be millionaires and they wouldn't be sitting and talking to you on YouTube, okay? Now, what I do is the bare bones of technicals that you can find in every book that's ever been made on technicals, okay? Which is that technicals is nothing more than probabilities. What I do here is tell you that, okay, the price has a higher probability of moving to the upside or the downside. And way back here, I actually told people way back here in July and August that price would more than likely come down to 5,500. I had no idea when it was going to happen. I just knew it was going to happen. Why? Because I had already seen the structure broken, which was this order block right here. It was not respected, right? When you respect an order block, which is the buyers in this area right here who decided that the price was way too undervalued to fall, to this level or this level, they decided to push the prices up even higher. Now, those people get disrespected by price coming down to that level. They're eventually going to sell. And when they sell, this mountain of BTC being held in this area right here is going to collapse the price, okay? Because the buyers who, created an order block like this are not small fish like you or I. They are, big whales. Not saying that they're smart money or institutions, but they're people who know exactly how high or how overvalued or undervalued this thing is, and they're going to push it higher. Okay. Now clearly the fact that prices in this OB right here tells me that, okay, well, we're staying above 50% Fibonacci of this OB, but can we stay there long enough? Can we climb up towards $4,700, which is, the 100% of this OB right here? Now, unless we do that, I can definitely tell you that price will retest 3,000, maybe even lower at some point. And that lower block is about 2,900 to 1,900, as I mentioned. Now, if that breaks, then we're in serious trouble. And I don't even want to think about it, but there's this gap that hasn't been tested as a support and resistance flip, which is right around here, okay, between 1,900 and all the way down to about $1,200, okay? Now, remember how I mentioned how horizontals are supposed to be tested for, a proper confirmation? Well, here's a perfect example, right? So price goes up all the way to 3,000, comes back down here, and then moves up again, right? So went down to 18 or 1,900, but then went up all the way to 5,000. But look, it retraced and came back to this level with this large wick, and it basically retested this, which was once resistance, and came down and retested it as support. And then price moved away, okay? This is exactly how you want a tight ship to be run, whether it's Bitcoin or any other asset. You want resistance to be tested as support to make sure that the floor is just not glass, that it's not going to break through if the price is not going to come, if the price is going to come back to it, okay? And why do we do that? Well, the reason you do that is because you want to ensure that the people holding in this range are not just people with weak hands, okay? These are not people who are going to capitulate when the price comes back down to this level in the next few weeks or the next few months, okay? You want to make sure that these people right here holding are strong buyers, okay? They do not let go, and more than likely they'll double down and probably accumulate more, okay? But the fact that price is already coming down to this level and it's already breached this level is probably scaring these buyers, or if anything, it's probably already scared them away, and that's why we broke down through this order block so fast and hard, all right? Okay, so let me go through some other things, guys, before I get back to the technical analysis. If you go to our CryptoSamyak website, you can buy a one-on-one session with me. I do portfolio reviews. I can rebalance portfolios. I can teach you technicals. You get access to our channel. Actually, we have multiple channels, trade channels, channels where I post daily Bitcoin analysis for our Advantage members. So we have a deal going on for the new year, so please go check it out, CryptoSamyak.com. And if you go to this website right now, we actually have a competition. Horizon, which is the previous Zen Cash, is giving away $100 in free Zen. You have to go to the Sphere wallet and check it out. So go to our website and it's on our homepage, okay? All right, so here are things that I watch on a daily basis and the websites that I keep in my bookmarks, essentially, okay? So Masari is a website that I pay a lot of attention to, okay? One, because it has a lot of good metrics. Their API is really good, and they really seem like a unbiased, non-shilling crypto metric website. All right, so on this website, I like to look at the different sectors of cryptocurrencies, okay? So there's sectors such as, the currency itself, which is probably, things like Bitcoin, Bitcoin, Stellar, Litecoin, all this stuff right here. Then there's things like stable coins and reward systems and smart contract platforms like EOS and Ethereum. This helps you at least categorize and understand exactly what the hell you're investing in and why you're investing in it, okay? Another thing that I like to focus on is, their research community. It's really great. And one of my favorite projects, Nebulous, they actually have a bunch of their co-founders and founders as advisors or, people who contribute to this community, okay? Another website I like to focus on is CoinGecko. This is where I get a lot of data from. I like to, siphon between CoinGecko and CoinMarketCap because sometimes I feel like, one website may be biased or have incorrect pricing data versus the other. So, I gather some data from here. And you could download their, quarterly reports, which I think are really great. I get to read these every quarter, and I think they have monthly updates too. So I love reading these. This is a quick, 10, 15-minute synopsis of the crypto space, and they do really great work, guys. So please check out their work. Again, I have nothing to gain from this. I'm just telling you exactly what I read and how I start my day and how I do my analysis. Another website that I really like is Coinmetrics. I think it was developed by someone named Nick Carter. I've heard him on podcasts before. Seems like a really smart guy. So, you can look at the network value to transactions ratio. Now, if you don't know what this is, please go look it up. But basically, this is a good indication to figure out what exactly is happening behind the curtains of Bitcoin or even other cryptos, right? So you can select, say, Ethereum. You can select, Dash and Waves even, right? So these are all different cryptos that you can see exactly what's happening behind the scenes, whether it's their, UTXOs or on-chain or off-chain transactions, okay? All right. Now here's one of my favorite things to do, which is correlations, okay? Everybody talks about, oh, is, Bitcoin and Ethereum going to go up? Or please, check out this alt or that alt. Well, let me show you guys, by one click how you don't need to look at any other chart for the most part because all other alts are heavily dependent on the movement of BTC, okay? Let me show you exactly what I mean, all right? So here's Bitcoin, which is in the red right here, and here's Ethereum. As you can see, since pretty much, July or August of 2017, last year, the price has been climbing towards its correlation, okay? One means you are highly correlated to the alpha asset, okay? 0 means you're, uncorrelated. A negative number means you are negatively correlated, meaning that Ethereum at this point was actually moving downward while Bitcoin was moving upward, okay? Now you can do this with, many other cryptos like BTC ETH. Let's see, what else do they have? All kinds of, NEO, XLM, XMR, XRP. Let's do XRP just for fun, okay? Because I know people have been saying that it's been uncorrelated. Well, let's see. All right, so here's XRP, guys. BTC XRP, right? So we see that XRP at some point over the last, few months. Let's see. let me zoom out of this and let me do show all. Okay, so for the most part, you know, even XRP, right? It's been pretty much correlated to BTC. But as you can see, it's now having a negative correlation for the past few months, starting right around, you know, November time, right? That's when we started seeing XRP start jumping in price. And this is probably why, right? Because it started to deviate away from BTC's path, meaning that it's not dependent completely on BTC's price action, which is definitely a good thing, because you do not want a asset to be directly correlated to something that you already know is falling, right? So you can see way up here, you know, September, October, November, the correlation has gone down, so definitely a good sign. Okay. Another thing is, yeah, we talked about backed a little bit, guys. So they did raise $182.5 million from 12 partners. However, they did have their launch delayed, I think probably February or March, I think I read. So I know they're going through a lot of regulatory hurdles, and I'm still patient with them. I don't really know if backed is going to be a big mover for the crypto markets, because like I said before, right? The people that really move the markets are the institutional investors, and those people, in my opinion, have not entered the space just yet. Okay, I think they still have a long way to go. And I think they want to buy Bitcoin in other alts, possibly at much cheaper prices. And who knows, this might be a big play by backed and other institutions to keep delaying till they reach a price agreement, say, you know, $2,000 per BTC or $3,000, and then they'll step in and they'll accumulate for many, many months, kind of like accumulation happened, you know, way down here, right? Remember in 2015, price spent a significant amount of time between the range of, you know, $300 and, you know, $160 or so, okay? And then it just took off to 20,000. Now this could actually happen again. Who knows? We might spend maybe a year at prices, you know, staying stagnant at 2,000 and 3,000, okay? But this is a good thing because you want accumulation to happen. You want smart money to come in, guys, because those are people who are ultimately going to move the markets, not retailers, okay? Some positive signs about the space is that the fundamentals behind the scenes, even though price action has, you know, pretty much dwindled down, BTC's down almost 80 to 85%, ETH is down almost 90%, majority of alts are down, you know, 80 to 90%. The fundamentals have not completely dissipated. They're actually improving, in my opinion. You know, Coinbase has been adding more cryptocurrencies with, you know, fiat on-ramps. They're providing custody services for institutional buyers. You know, Fidelity and TD Ameritrade are getting more involved. They're actually, whether it's Bancor or Coinbase or other apps, are actually having, you know, their wallets or their platforms being able to swap one crypto for another. So it's making it easier for retailers to use their product, right? I personally think that, you know, the fundamentals will keep improving, and, you know, stuff like this, right? This Alex Gladstein article, he mentioned how, sorry about these pop-up ads, but, you know, Venezuela, which is a country that's struggling economically, right? They started to embrace Bitcoin, and they started to use it because their currency was getting devalued by over, I think, close to 1,000,000%. And Bitcoin really helped them. And I think Dash did too. But the point is, you know, blockchain and Bitcoin are here for the countries that really need them. And in the future, who knows? They might be here for the countries like, you know, America and the European countries who may not need them just yet. But we do have some purpose for them to fulfill. I just don't know what exactly it will be. But clearly, you know, there's less than 1% of the world, by the way. This is a quote from Alex Gladstein. And I'm paraphrasing here, but less than 1% of the world, which is less than 40 million people, have ever used Bitcoin. But over 50% of the world is actually under an authoritarian regime, okay? For them, Bitcoin is the way, guys. It's the way out, okay? And for the Western countries, right, who are not under authoritarian regimes, we have all the other aspects of Bitcoin that are really appealing, such as the speed, the reliability, the low fees, and most importantly, privacy. Okay, being able to send your Bitcoin to some person in Russia or Oman or India is a godsend, right? If I wanted to send $100 through Western Union, they'll probably take at least 7 to 10% of the fees, right? I have to physically go to the Western Union when it's open. I have to send the money out, and the other person on the other side then receives less money, and they get it, in a few days. Versus Bitcoin, I mean, it's almost instantaneous, right? It's probably, a tenth of the fees from Western Union, maybe even less. The time is also easily, 1/10 of that. So usually a Bitcoin transaction can get from one end to another in less than 20 or 30 minutes, right? Western Union can sometimes be up to 2 weeks, right? Depends on where you're sending. So clearly, to me, Bitcoin has a future, and I think it's here to stay. Okay. Coinmetrics, like I mentioned before, this is a website that I personally like. You could read all kinds of research and statistics, news, etc. on this website. Okay, coinmetrics.io. One part of the website that I like is useful resources for investors. Okay, this has a ton of resources, guys. If you really want to beef up your knowledge in 2019, go to this website and start reading. Start empowering yourself with knowledge. Because remember, guys, knowledge is power, and no one can, convince you or dissuade you from all the bullshit cryptos out there or garbage technicals. If you read this stuff right here, you will know more about crypto space than any random YouTube shiller. Okay, so read about what's happening in Bitcoin, what's happening in the crypto space, what's happening in Ethereum. Read blogs, read data. Come join our channel, and you can start asking these questions, right? By the way, guys, if you join the channel today, I will be providing one free trade tomorrow morning, which is going to be the beginning of 2019. That's going to be one of the cryptos that I own, and I'm not trying to shill it in any way. I'll tell you exactly where I bought it, and I'm actually accumulating more, and I have a ton of fundamental and technical reasons behind it. So you will, more than likely even be getting in at a cheaper price than I have been. Okay, but I want to tell you guys that if you join our channel right now, you will, definitely get that trade tomorrow morning. Okay. By the way, I'm on Eastern time, so don't knock on me if I get it to you late and it's your evening time. All right. So this is another website which is really cool. You can look at the volatility index of BTC. Obviously, the latest 30-day estimate is about 4.6%. This is basically the movement of price between the lows and the high. That's the volatility. Okay, and you can look at more data on this website if you want. Okay, guys. What else do we have? Oh, this is one of my favorite things that I typically open up. It's basically a signal and a website where I get to see large transactions of BTC being made on different exchanges. Okay, so you can see that $100,000 transactions, 150. So these are typically big players, or maybe a bunch of people or a bunch of bots that are moving the prices up or down. Okay, and you get to see this in live action, basically, right? So this happened 12 minutes ago. This happened 14 seconds ago. Okay. So yeah, check out this website. It's called aggr.trade. All right. Another cool chart that I like is the halving. Okay. This halving is really cool because, one thing I've noticed is whenever BTC comes close to its halving, that's when it's beginning to start ramping up for a new bull run. Okay. So the next halving is mid 2020. Now, as I've stated before, that anywhere in the middle of next year is my guess that BTC will probably be bottoming out. Now, I'm not saying that it's going to start as a new bull run. I'm saying that the accumulation period or the bottom or the bleeding will probably stop by the middle of next year, which is anywhere between the next 3 to 6 months, right? And then after that, we might start our next bull run. And I don't really know where the bull run is going to go. But if you take a look at the size and the magnitude of the previous bull runs, you could clearly see that it's probably going to be a pretty intense one. And it might be the final wave of Bitcoin's bull run, in my opinion. Okay. And I think we'll see some stagnation in prices. And then I think over the next 5 to 10 years, we'll see a lot of adoption and a lot of use cases being utilized. Next thing I want to point out is someone wrote this paper, Jeremy Lawler. It's a very good paper about how you essentially assess the fundamentals of cryptos. Okay. It's on Crypto Guide Pro, Crypto Analysis Fundamental Investment Research. Okay, so check this out, and you can read this stuff if you really want to get into some alts, and you can basically make like a criteria, right? So you can go through the criteria and you can check off why you want to buy certain things or why you don't. Okay, this is another website that I told you guys about before, Bulkowski. Here you can learn a lot about technicals, patterns, etc. Okay, tons to learn from this guy. Let's get back to charting, guys. All right, so as I've said before, there's a ton of different OBs. Oh yeah, this is where I had drawn the order blocks right here, okay? So these different order blocks show you, exactly where price is moving through, over the past few months. And again, it's coming down through this level right here, which is about $3,800. And if it breaks down through, I would expect 3,000 to be touched. Okay, let's see what's going on over here. Okay, well, that was weird. I think I had drawn an Ethereum chart here. Let's see if my ETH chart is up. Ah, there we go. Okay, so here's one of my charts that I drew a while back. Okay. So I had drawn this chart way back here, guys. I think I had drawn it way back in September and mentioned that price will ultimately start falling below $100 if 150 is broken. Okay, 150 was a critical level for us to maintain, and the fact that we broke it without even blinking told me that the bears are significantly under control. Okay. And you could see that even on the weekly chart, right? You could see that price came down to the same level, which was, this is the OB of Ethereum right here, okay? It's between, anywhere between 350 all the way down to 150 or so. And you can see price reached up to this and it got rejected, okay? So I would expect an even further fall for Ethereum, okay? And it's going to be rough out there for the next year. But as I've said, I would expect the bottoming of the market to happen sometime next year. People really underestimate the power of whales and smart money to move markets when they really want to accumulate and be part of the game, because they feel that retailers have had an edge on them. All they're really going to do is push the prices so down low that you will not believe your eyes. And they're going to accumulate and take all your Bitcoin, Ethereum, and alts off your hands. As Warren Buffett always says that, trading and investing is basically a game about patience. It's transferring the wealth from the impatient to the patient. Okay, so Troxus Majan said sometime next year, meaning 2019 or 20. So Trox says, what I was saying is the bottoming of the market will probably happen in mid 2019, meaning the prices will probably hit a bottom and hit a low, and then they'll probably range for accumulation. Say, for example, they might move between 1,000 and 2,000. That's just an example. I have no idea if it's going to go that low, but they'll probably range between 1,000 and 2,000 for accumulation. And then maybe around early 2020 or middle of 2020, prices will start moving at least towards their previous high of 20,000, and they might exceed that after. Okay, so that's all I'm saying. All right, so guys, prices coming down to 130, and as I mentioned before, that we hit this OB right here, and this became resistance, and price is probably going to come down again. And pretty much, you know, one of my final barriers that I see for Ethereum is way down at $40 or so, and that's going to be really rough. And I know people are going to be pissed off at the space, but that's kind of the level that I'm looking for if price comes down to that $80 to $75 range again. Okay, so be careful out there. All right, let's see what else is going on. All right. As I said before, guys, come join our CryptoSamyak channel. Come join the Advantage program. You will see the trades that we make, and even in, you know, a market that isn't doing so hot, I'm still helping people and putting on analysis for quick gains here and there. You know, even in bear markets, guys, there's always money to be made. And none of this is financial advice. All I really do is put up technical analysis. If you like it, great. If you don't, that's fine. You know, you can go find other channels. I'm not going to bound you to me. You can see all the gains reviews right here. People have been essentially doing trades, you know, 67%. We have one-on-one sessions right here, more one-on-one sessions, QKC, XLM trades, one-on-one sessions. So I love giving one-on-one sessions, but I also love putting down trades. Here are our channels right here, short-term, medium-term, long-term. This is where I throw in our trades. Here's the Bitcoin analysis section. I do this pretty much every single day, guys. You know, you could go back all the way. Every single day I put on a 10-minute video analysis, and I try to go live maybe once a week or so, okay? So if you're watching this for free, you're not getting nearly as enough content as you would if you were part of the Advantage program, okay? So please come join. And if you join, today I will be providing a free trade, even if you join the free lounge, okay? So all you have to do is go to CryptoSamyak.com and just join for free. Try out our 14-day free trial, all right? So one thing I wanted to show you guys is this, okay? So let's go to this chart right here. I think it's Bitfinex. I don't know where it is. Let's see. Let's see where I drew this bad boy. Bitstamp. Okay, so it's on Bitstamp. All right, so I'm gonna draw this out real quick, or rather pull it up, and I wanted to show you guys something really interesting. Okay, not that one. Here's the Bitstamp chart. Okay. So what exactly is this chart, and what does it mean? Okay, so basically, guys, I'm gonna make this a 3-day chart because it's easier to view. So here we go. Okay, so what this chart really is, guys, is a visual of all the times Bitcoin has reached a high or a lower high, and then come down to create a low, right? And then what does it do for its next Fibonacci levels? Okay, so if you guys don't know what Fibonacci levels are, again, you know, go read about it on this Bulkowski website that I mentioned earlier, or come join our channel and I'll explain it, okay? So basically these Fib levels, you could see all the whites right here, right? All the white levels are the times when Bitcoin came down hard and then it retraced to 382, sorry, which is this level right here, okay? And then you could see from 11,700 it came down to 6,400, and then it retraced to 618 Fibonacci, then it went down to 5,700, then it moved up to 618 Fibonacci, same thing again, you know, hovered in the 6,000 level, moved to 618 Fibonacci. So the point of these levels is that, guys, whenever Bitcoin has gone down, right, it has not retraced more than the 618 Fibonacci level, okay? So what we may be seeing right now is a large ABC correction, okay, of this magnitude right here. So here's the A wave, B wave, and then C wave potentially coming down from here, okay? So that C wave is probably going to be anywhere between $4,800 to $5,200. Because as I said before, Bitcoin has barely ever gotten up past 50 Fibonacci, 618, or 382. So in these cases, it's one of these price ranges, okay? And after that, what's going to happen is, say we're going to create a W bottom. A W bottom is a bullish pattern in which, a half a W is created, and then another part of the W is created, and once it breaks this part of the neckline, the price rockets to the upside for a big markup, okay? So that could actually happen in crypto, but what exactly typically happens? Okay, so well, when price reaches and finishes, this B wave right here, anywhere between, could be 4,400 to 5,200, price is going to come down and sweep the lows of this $3,100. And why is it going to do that? Well, a lot of retailers will have their stops right below this $3,100. And when price reaches to $3,000, $2,900, $2,800, they'll sell, because they're going to think that, okay, well, prices are going to go lower, so I might as well sell. I don't want to be at a loss. And then there's a lot of buyers waiting in this area. Now, I'm not saying that this is exactly what's going to happen. I'm saying this is how W bottoms work, okay? Now, there's a lot of buyers potentially waiting in this area, and they'll wait and generate that, that fear and panic, and you will ultimately sell into their buy walls. And when price reaches in this area, they'll accumulate and accumulate from you, and then they'll take the prices up for the following few months or years, okay? Now, another thing that could go horribly wrong in this case is that price comes down to this level and just rips right through it. This is why no one really knows where the bottom is until price hits a bottom. And so when price hits a bottom like this, you want to see a bounce back and then retest as support, and then slowly move up as higher lows, okay? Until then, you'll never know exactly where a bottom is established. And that's why in this case, I don't even know if 3,000 is the bottom, like I said, right? Unless we come down to this level and we maintain higher lows, like for example, we could basically, stop at $3,500 tomorrow and not allow Bitcoin to fall any further for months, okay? That to me is an indication of a bottom, okay? Don't ever think that you need to wait for these V-shaped bottoms and catch them at the, at the very low. It's not gonna happen. More than likely, you're gonna get wrecked. So don't be foolish. Wait for proper accumulation, guys. Just like I told you guys way back in 2015, right here, when price went to a low of almost $162 or so, you could see this accumulation right here, right? It spent time here in this region for months, almost 10 months. That's a lot of accumulation, okay? And this is where a lot of people just get bored because the price is just ranging, People in crypto want excitement, they want volatility, and they're hooked to those 10% markups and drawdowns. And so when you don't see that, you start becoming impatient and you start becoming bored, and then you start giving up on the space and capitulating. And then the smart money and the smart traders eventually come in and they take your Bitcoin and your alts and your cryptos from you, and then they push the prices higher. Okay? All right, let's see. I don't see any questions, so I'm pretty much going to leave it at that, guys. Thank you for joining me for your New Year's Eve Trader Talk YouTube live session. I hope you guys enjoyed it. Please give me a thumbs up. Please join our CryptoSamyak channel, guys. We really are a unique community, and we don't do any bullshit here. So please come check us out. Tomorrow, if you do join, whether it's the Advantage program or the free lounge, I will be providing a free trade. You can learn even stock market trading, Forex trading. Here is where we have a ton of our conversation happening. So, all of our stuff is majority right down here in the Trader Talk, and we have a lot of conversations in there. So yeah, guys, and if you also want to learn, about ICOs and which ICOs are good, you can come check that out. So yeah, guys, come join, and hopefully I will see you guys in 2019 tomorrow in our community, CryptoSamyaks, okay? Again, if you missed the page, CryptoSamyak.com, go here in products, and you can buy the Advantage program right here, okay? All right, take care, guys. Cheers, and have a blessed New Year's Eve and a happy 2019. I will see you guys soon.